Joining us right now is Ian Shepherdson. He is chief economist at Pantheon Macroeconomics. Macroeconomics also doesn't fit in the prompter, Ian, at least in one line. Ian, welcome. We've been trying to figure out what comes next from the Fed. And you think that while the Fed was underestimating inflation on the way up, it's also underestimating disinflation on the way down.
Yeah. On some of the short-term measures of inflation now, we're pretty much back to the target. So in the last 3 months, core PCE, 2.2%. Now, the year-over-year is still quite high, but the 3-month is 2.2%. That's just a whisper away from where they want to be. And yet they're still talking, some of them, about potentially wanting to raise rates again. Of course, markets aren't listening. Markets stopped listening a while ago and now pricing in more than 100 basis points of easing for next year. But the Fed still has this lingering, we must retain optionality. What if it all goes horribly wrong again and we have to hike? We're kind of at an inflection point, though, where the market is just not listening to them anymore, and opinions are splitting away between what investors think the Fed's going to do and what the Fed is still saying that it might do. Which is why you think a cut could come sooner, because when it does come, it's going to happen really quickly. Yeah, I think when they finally acknowledge that they've beaten inflation, they've got what they wanted, the language will change fairly quickly. Markets are way, way ahead of them now. But over the next few months, unless there's a really big surprise to the upside in the data, which I'm just not seeing any sign of that, then I think that they will flip and recognize, as Jay Powell has said several times, as inflation keeps falling, if they don't cut rates, then real rates just go up further, and you're squeezing an economy which really doesn't need to be squeezed anymore. So you have to move. You've got to adjust those rates to the downside to kind of catch up with this inflation drop. But if they are slow to recognize this because they don't want to get caught off sides and have inflation run up again on them and have some embarrassing reversal that they have to do, does that mean that the damage to the economy really shows up in full force before they do something, or some sort of break? Yeah, this is the risk for sure, that the longer you leave rates at the peak because you want to be 100% sure that you've done enough, the danger is that you've done too much. And in some parts of the economy, you can see some stresses emerging on some of the consumer data. Some of the retailers have been quite nervous about consumption going into the holiday season, and business spending intentions, investment intentions are really quite weak now, and that's making me a bit nervous. So, yeah, the danger is that you've broken something. But, of course, you've got to see this in the context of having got it wrong, the Fed having been too willing to believe inflation would come back down quickly, and then finding they had to catch up. So you can't make the same mistake again. You can just make a different one. You can make a different one. Well, this is the history of Feds going back over decades. So what's your base case for next year? What happens with the economy? I think it'll be sluggish. I'm hoping it won't break. But I got to say, there's probably more risk of something breaking than another year of upside surprises, which has been the story of this year. But there's a lot of things now where there's some stress, commercial real estate, the consumer, everything. There's some real downside risks which haven't crystallized yet. They haven't materialized in the hard data. But I'm losing a bit of sleep over the first half of next year, I've got to say. So I think the Fed responds quickly. When they get going, they go pretty quick. Were you losing sleep at any point over the previous year? Oh, yeah. Some of the inflation numbers last spring were alarming. I mean, the Fed had to deal with something that was really looking quite unpleasant, and they hiked very aggressively, ultimately, having started late. But there was a period, certainly, where there was a risk of that dreaded spiral. But that's ancient history now. I mean, they're done. They just can't quite bring themselves to say so. So do you think that there is a hard landing more likely, or a soft landing? I think a soft landing is my base case, where the economy kind of bumbles along through the first half of next year and then maybe picks up a bit later. But the hard landing is I think, a bigger risk than the upside. So the risks are kind of asymmetric. It's going to be okay or bad is more likely than, look at this, another year of upside. I know you're an economist, not a market watcher, but you think the market is way out ahead of the Fed. You think that's maybe the right move? Ultimately, yeah, the Fed's going to validate what the market's saying. They're always slow to say so. They won't declare victory till they're sure, but they will ultimately. And I think they cut by 150 basis points next year. So it becomes a valuation story versus a margin squeeze story. Right. And the market's saying that the valuation story is bigger, and I think it's probably right. I mean, whether equities continue to rally at the same rate they've done over the last couple of months, that's a big ask. But fundamentally, I think that the valuation story is more important. Ian, your ears must have been burning. We were talking about you earlier this week. We are glad to see you at the end of the week, and come back soon. Thanks for having me.
And you get someone named Ian should speak in the same manner. I think they have with the same credibility. Is really what I'm saying. Yeah, you're welcome. Where'd you grow up?
Newcastle, God's own post-industrial city.
Is it?
Yeah.
North,
Newcastle
south,
brown
east,
ale?
north of London?
Oh, yeah. And nearly on the border with Scotland.
Is Newcastle brown ale something you actually drink, or is that just something dummies over
No,
here?
it is actually consumed in Newcastle.
Okay.
And a wonderful thing it is, too, in small quantities.